What did school teach you about money? Nothing. I tell you, go to school, get a job, no jobs, work hard, pay taxes, get out of debt, save money, and invest in the stock market. Stupid. I won't do that. But basics are this, okay? In the world of money, there's 3 types of income. So this is financial education. So if I was teaching a bunch of, let's say, high school sophomores at 15, I say there's 3 kinds of income. It's a very important word. And number 1 is called earned income. This is what happens when you go to school and you get a job and you work for money. Earned income is you working for money. It's the highest taxed income. That's why that advice, go to school, get a job and work hard. You're working for
It's outdated.
earned income. Yay, yay. You pay a lot of tax. The second type of income is portfolio income. Portfolio income is also called capital gains. That's when you buy low, sell high. So that's portfolio, and I don't know the tax rate, but years ago it was about 20%, I forget now. It's changed. So most people, when they go to school, they get a job, they work for earned income, and they invest for the long term in the stock market, they're investing for portfolio income. And the third type of income is the income that myself and Kim and Kenny and all my advisors invest on your parents.
Passive income.
It's called passive. And the reason passive income is good is because no tax. It's wonderful stuff. So those are the 3 types of income. So if I was teaching a bunch of high school kids, I said, when you leave school here today, the big question in your mind is, what kind of income do I want for the rest of my life? Well, I wanted passive. And the average person, because they have a job, is working for earned income, which is the highest tax. You get tired working for that. So when you look at, again, the Rich Dad financial statement here, income, expense, assets, and liabilities, okay? So earned income is this here. That's earned, okay? When you work for, and then the problem with that income is tax. Then if you're working for portfolio income, you're generally working for this. You buy a stock for, let's say, Apple for $10, and it goes to $50, and you sell it. The trouble with that, again, is tax. But if you're working for passive income, which your mom and dad work for, this is passive income here. Okay, it's cash flow, it's also called. So that's why I have the cash flow board game pictured here. So all I wanted was passive income. So what I have today is I have about 7,000 rental properties. I have hotels, golf courses, oil, and all this. But again, it goes back to these 3 types of income: earned, portfolio, and passive. So if I was talking to a bunch of high school kids, or even elementary school kids, it's not that hard.
Yeah.
But I'm glad you asked the question, because I think a lot of the young people can think now, say, well, why am I in school? I don't know. If you just want to work hard and pay taxes on earned income and flip real estate or flip houses, then you're working for portfolio.
Yeah.
I don't flip.
Yeah.
That's a very big difference. I don't like to buy low and sell high. That's flipping. That's called capital gains. I invest, which is portfolio. I invest for cash flow, which is passive. And I can turn capital gains into passive. I mean, it gets crazier and crazier and crazier from there on, but I'm glad you asked the question.
No, thank you, Robert. And I think, like you mentioned before, for anybody who's deciding what path to take, just ask yourself what kind of income you want to earn.
Correct. And it's even worse than that. Are you told to get out of debt?
Yeah.
So let's say I buy a property, okay?
Yeah.
I bought it for $1 million. It's now worth $10 million.
Yeah.
If I sell it, I now have
Taxes.
portfolio capital gains. If I borrow, let me keep my math simple. It goes from 1 million to 10 million, okay? So let's say I buy a property for 1 million and it goes to 10 million.
Yeah.
If I sell it, I have a $9 million capital gains. I got to pay tax on that.
Yeah.
I would never do that.
And that's what I love about what you and Kenny teach, because you showed people how to make it an infinite return, not pay taxes,
But
and
how
have it
do I?
cash flowing.
But I still want my $9 million.
You reinvest.
I borrow it out. It's called a refinance. When that money comes out as debt, $9 million as debt, how much tax do I pay?
0.
0. That's what financial education
Yeah.
is for.
Yeah.
You know, not that garbage they teach you in school about investing in the stock market, in mutual funds and 401ks and all that stuff. I don't do that. But you should, because if you don't want to study what we study here at Rich Dad, then you should invest in 401ks, mutual funds, pensions, flip property, buy low, sell high, and pay taxes. But that's not what we do here.